Codan has two businesses that tell completely different stories about what kind of company it is. The MineLab division makes metal detectors. It is a consumer and prospecting product, strongly tied to the gold price and regional demand cycles. The Communications division, trading as DTC, makes radio and communications technology for military operations. These two businesses sit inside the same listed entity, but they belong to different valuation regimes. A metal detector business gets valued like a cyclical industrial company. A defense communications platform with military contracts and battle-tested technology gets valued like a defense contractor. This distinction matters more than it might appear, because the market has been using both frames simultaneously. Codan shares were trading near $16.56 a year ago. They are now above $40, with a record high on 29 May 2026. The 130% gain is not explained by MineLab alone. Even with a strong gold price supporting MineLab margins, that kind of re-rating requires a valuation frame shift. The question is whether that frame shift is permanent or conditional. A permanent reclassification means the market now prices Codan as a defense technology platform first, with MineLab as a supporting revenue stream. A conditional reclassification means Codan is receiving a geopolitical premium that will compress when conflict uncertainty eases. Most mainstream coverage has been unable to distinguish between these two. Articles this week describe the run as driven by more attention on defense exposure and the current geopolitical landscape. That framing does not commit to either answer. What changes the analysis is looking specifically at what DTC is building, not just that defense spending is rising. The residue from this chapter is the core question. Is DTC's product genuinely differentiated, or is it a beneficiary of the same defense budget expansion tide that is lifting every ASX defense name?
On 22 May 2026, Codan announced that its DTC subsidiary had agreed to acquire Adaptive Dynamics, a US-based engineering company, for approximately $21 million. Adaptive Dynamics specializes in anti-jamming and interference mitigation for communication systems. It also works in assured positioning, navigation, and timing, known as APNT. These are not generic defense technology capabilities. Anti-jamming systems are specifically designed to keep communications functioning when signals are being actively disrupted, blocked, or attacked. APNT systems maintain reliable location and navigation data when GPS signals are degraded or spoofed. Both capabilities have become operationally critical in modern conflict environments. Russia's war in Ukraine has produced extensive evidence that drone communications and navigation are routinely targeted by electronic warfare. The Middle East conflict has added further examples. For drone operators, losing communications or navigation in a contested environment is not a recoverable situation. DTC's existing Blue SDR product has been described by Macquarie as battle-tested in Ukraine, but it operates as a communications radio. Adaptive Dynamics adds the layer above that, the ability to maintain communications integrity when the adversary is actively trying to break it. This is the key distinction from the general defense budget thesis. Rising drone budgets benefit every company selling into that market, but anti-jamming and APNT capabilities benefit specifically the companies positioned to solve the technical problem that battlefield experience has identified as the most persistent operational gap. The US 2027 defense budget is planning to triple drone and related technology spending to approximately US $74 billion. The Australian federal budget allocated an additional $53 billion for defense over 10 years, including up to $15 billion for unmanned vehicle systems. Codan's DTC division was already targeting this market. Adaptive Dynamics positions DTC not just as a radio supplier, but as a resilient communications and contested environments provider. That is a different addressable market, with a different pricing structure and a different competitive mode. The acquisition consideration of $21 million appears modest relative to Codan's market capitalization above $7.3 billion. But the analytical weight it carries is larger than the dollar figure because it confirms that DTC's growth strategy is product capability-led rather than budget cycle dependent. Macquarie's DTC research note from 14 May identified this direction explicitly. The note stated that DTC's UAD radios are expanding beyond aerial platforms into ground and marine applications, and that battlefield lessons from Ukraine are accelerating demand for military-grade resilient solutions. The Adaptive Dynamics acquisition is the concrete step that moves DTC from beneficiary of that trend to builder of the technical capability the trend requires. The unstated premise in most bullish Codan analysis is that DTC's differentiation will hold as the adversary technology environment evolves. Electronic warfare is not static. If anti-jamming becomes commoditized, the moat narrows. Adaptive Dynamics' focus on adaptive filtering and advanced algorithms built over 20 years is the argument against that narrowing, but it is an argument that requires ongoing technology execution to remain valid, not a structural position that can be held passively. The residue. The Adaptive Dynamics acquisition shifts the analytical question from whether Codan deserves a defense sector premium to whether DTC-specific anti-jamming and APNT technology will sustain differentiation as the UAV market scales.
Macquarie upgraded Codan to outperform on 14 May 2026 with a price target of $44.20. That was a 5% increase from a prior target, set when the shares were trading near $39.95. The target implied modest upside at the time of publication. Codan shares are now trading at a record high following a 17% intraday move on 29 May 2026. The price action has run past the point where Macquarie's target provides a clear margin of safety. This creates a specific tension for holders. Macquarie's bull case rested on DTC's UAV communications positioning, the $53 billion Australian defence budget extension, and Minelab's second half tracking ahead of a strong first half. The Adaptive Dynamics acquisition was not part of that target because it was announced after the Macquarie note. A holder sitting at the current price level is essentially evaluating whether the acquisition adds enough to the technology thesis to justify a re-rate above $44.20. The acquisition is earnings neutral in year one, with upfront and contingent payments totaling around $21 million spread over 2 years plus royalties. The near-term financial contribution is not the argument. The argument is that Adaptive Dynamics closes a capability gap in DTC's product suite that was visible in the Macquarie research but not yet addressed. If that gap closure accelerates DTC's positioning in the $15 billion Australian UXV budget and the US $74 billion US drone technology allocation, the valuation case extends. If anti-jamming and APNT remain niche within those budgets, the acquisition does not change the trajectory materially. Minelab provides a partial buffer. Codan's communications division is expected to grow revenue at the upper end of guidance, which is 15% to 20%. The Minelab division is tracking ahead of a strong first half, supported by a gold price above $4,500 per ounce. 2 separate revenue streams growing simultaneously reduces the binary risk of the defense thesis alone. But Minelab's contribution also reinforces the identity ambiguity, because a strong Minelab quarter keeps the cyclical industrial valuation frame relevant, even as DTC's defense positioning deepens. The monitoring variable is DTC's revenue contribution as a percentage of total group revenue in the next result. If DTC is growing faster than Minelab on an absolute basis, the reclassification thesis has more ground. If Minelab is carrying a disproportionate share of the growth, the geopolitical premium interpretation retains its weight. The 29 May record high, following a week where ISX defense names broadly lifted on US drone funding signals, does not resolve that question. It amplifies the stakes of the next earnings disclosure. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.